Hi, my name is L.Y.T. Welcome to my video. Today I will discuss this kind of similar question. If obtain a 9-year high purchase financing for your bank and both a car that costs 180k in 2020, however he came to your last week to seek for your advice or his intention to sell his car with friends. Based on the underlying law and policies governing the product, based on a matter and propose a possible solution. So in this question, this is your hire and you as the half of the bank. So in here we have three solutions. First one is voluntary assignment of right. Is for the hire of the car voluntary assigning their right to the car to another party. Second is early completion. Is for paying off the car loan in full before end of the loan term. Last one is terminate the hire purchase agreement. For the hire agree to terminate car financing agreement before the end of the loan term. First is voluntary assignment of right. We have three processes. The hire needs to inform to a bank when his friend wants to buy his car. He cannot simply sell his car with his friend because he will offend the hire purchase Act 1967. Next, after informing the bank, the hire should settle all the efforts and pay a reasonable cost, and send the document to a bank. If bank approves to sell his car, he is successfully to sell his car with his friend. If not, then he should seek for another solution. Next is early completion. The hire also need to give a written notice to a bank and pay a net balance due. So how to calculate a net balance due? Amount outstanding minus statutory repay plus overdue interest. After paying a net balance due, the hire will become the ownership of the car. In this stage, the hire can sell his car without any permission from the bank. Next one is terminate the hire purchase agreement. The hire also need to inform to a bank to terminate the HP agreement, and the hire can require the owner, which is the bank, to sell his car. After selling the car, if the selling price lesser than the balance outstanding, the hire need to recover the shortfall. If the selling price more than the balance outstanding, the hire can earn difference. So in this agreement, the hire not liable to pay cost of repossession, cost of incidental to taking possession, and cost of storage. So to summarize that, by introduce those three solutions, what are the benefits to bank and customer? For a bank, is reduce the default rate when hire can transfer their obligation to a third party who is likely to make payment. Second, voluntary assignment of right, early completion or termination of a financing agreement can improve the customer satisfaction. If hire is able to complete their obligation earlier or transfer them to another party, they may have a more positive experience with bank. Last one, improve the liquidity. If a financing agreement is paid off earlier or terminated, bank can receive the full principal and interest from the bank at once. This can improve bank liquidity, allowing them to lend and invest. For a customer, the first one is the ownership. Once the loan is paid off in full, the hire can become the ownership of the car outright with no further payment or obligation required. Second is avoiding defaults. If the borrower is unable to make a loan payment, assigning a right to another party can help them to avoid defaults. Last one, customer has the ability to end financing agreement. If the borrower is facing financial difficulty, terminating the financing agreement can help them to avoid defaults. That's all for my presentation. Thank you. Bye bye.
Thank you for watching.